The audio was. Can you talk? Say something. The audio was. Can you talk? Say something. The audio was. Don't remove it because it's going to be the audio is that one is behind. The audio was. Don't remove it because it's going to be the audio is that one is behind. The audio was.
There's 1 minute left. We'll go get my laptop.
Hello, Gloria.
And the Zoom. Are you gonna start?
I will allow questions. Okay, you make me. Oh, it's okay. Let me see if I can chat open.
Gloria, hi. How are you today? I hope you don't mind I'm eating. This is lunch and dinner. And it's supposed to be healthy.
Let's see, if you don't mind, you can send a message. We'll be happy to reply back in there. Or you can just unmute yourself.
Okay, I guess it's 7 o'clock. Let's get started. Hi, everybody. Hato, can we get started, boss? Good evening, everybody. I hope you guys are doing good. Hector, how long is this webinar for?
30 minutes.
30 minutes.
Yes.
I don't need 30 minutes to teach people how to be financially
Rich. Free.
I only need 5 minutes. Earn, spend less, invest, rinse and repeat. That is it. So, hi everybody. My name is Marwan Ba. I am a real estate guy based out of Massachusetts, Boston. I've been doing real estate for 25 years. I've been teaching real estate for 17, 18 years now. I teach real estate agents how to get their license. And I invest in real estate. I invest in other stuff other than real estate, but my bread and butter is real estate. Why do I invest in real estate? Is because I think it's one of the most stable ways for people to be financially independent. So that is the reason why I invest in real estate. So I've been investing in real estate for 27 years. Man, that's a long time. 27 years I've been investing in real estate. And I own properties, everything from the mid-Atlantic all the way to New England. So from Washington, D.C. neighborhoods all the way up to Massachusetts, I own properties. But it took me a long time to accumulate the properties that I have because real estate is a very, very expensive endeavor. It takes a lot of money to buy. It takes a lot of money to fix, rehab. It takes a lot of money to maintain. Real estate tax is expensive. Real estate insurance is expensive. Utilities that you add to the property are also expensive. So it's an expensive game. It's a rich man's game, really, honestly, it is. With the Job Act in 2008, the crash of the real estate market, government introduced the Job Act. The Job Act allowed people that make regular income to pull resources together and make real estate a less expensive endeavor. So since then, we've been doing a lot of real estate projects with partners. But again, I started investing in real estate in 1999. I was still 19 years old in the military. I was in the U.S. Marine. And while I was in active duty, I started buying properties at the age of 19. So that was 27 years ago. And it wasn't until 2008, almost 11 years later, whatever, that the crash of the real estate market incentivized the government to come up with new avenues, new ways to invest in real estate. And those new ways are ways that people that don't have hundreds of thousands of dollars to play the game can come together and pull resources and invest in real estate. And that's typically called crowdfunding or syndications. But real estate is one of those things that honestly is a safe bet, there's no such thing as 100% safe, but it's a safer bet than anything else. Here's a couple of things that real estate does for individuals, particularly people like me. I am a reckless spender by nature. What real estate does is it forces me to save every single month. I have multiple properties spread out, and it forces me to put money aside for expenses. Forces me to put money aside for mortgage payment. Real estate also hedges inflation. So as inflation grows, the value grows. As inflation shrinks, the value of the property shrinks. Also, the rental of the real estate shrink. Rent are correlated to value of property. The higher the property earns rent, the more valuable that property is. So if inflation takes place, it forces the cost of rent to go up. What happens when rent goes up? The property value goes up. Even if it's the exact same property, nothing has changed, because the cost associated with operating, owning, taking advantage, using that property happens. What happens then is that the property value goes up because the net operating income shrinks, or the cap rate shrinks and the net operating income increase. Because the way that you calculate the value of a property is NOI over value times cap rate. So it's a formula that you use to figure out what the value of the property is, and there are standard cap rate in the industry based on the different types of property. The more attractive the cap rate, the better property you have, or the more valuable property you have. So because inflation forces people to charge more in rent because the economy is churning and things are getting expensive, rent also gets expensive. When rent gets expensive and you own property, that property goes up in value. So when you expect an economy like the US where they're trying to fight inflation, essentially what they're doing is they're trying to reduce the value of real estate property on purpose without saying it. Without going out there and saying, we're going to reduce value of properties because people are tied to property. They're calling it, we're going to reduce inflation. But when they reduce inflation, property value tend to drop. So when the mechanism that they use to do this is the Fed Reserve interest rate, because most financial institutions take loans from the Federal Reserve and lend to the public to buy property using a mortgage. Or they will use the capital that they have as deposit comes in, and then they'll take that money and lend to customer in exchange for what's called a note. And that note, when it's signed between the borrower and the bank, that bank then can sell that mortgage to what's called the second mortgage market, also known as collateralized debt obligation or MBS, mortgage-backed securities. When you sell it to the second mortgage market, those buyers of the second mortgage market are Fannie Mae, Freddie Mac, Ginnie Mae, VA, FHA, financial institutions, or Wall Street. And they buy those things packaged, and then they replenish the bank. But some of the biggest buyers of those CDOs or MBSs or packaged are Federal Reserves and treasuries and things of that nature. That's the mechanism they use to replenish the bank. Now, when they increase the rate of interest that they lend the money at, banks borrow less. When banks borrow less, bank lends less. When bank lend less, there are less people able to go and buy properties out there in the real world. So that's the way real estate are intricately tied to the economy, right? That's how they're tied to the economy. So when you understand these things, then you become a real estate investor because you are essentially indirectly betting on the US economy when you're buying US real estate. Now, real estate is a beautiful mechanism that allows you to leverage it. So if I want to buy a stock, a lot of times it's 20-1 or whatever. If I want to do options or whatever, it might be 5-1, 10-1 or whatever. But real estate, it's an 80-20 kind of game. If I have 20% on an investment property, I can borrow 80% of it. So if I have $20,000, typically, it's very easy for me to get $80,000 of loan so I can buy a $100,000 property. But the beautiful thing about it, different than the stock market, most stocks do not pay dividends. Very few stocks pay dividends. And the stocks that pay dividends, you have to own the stock, the actual underlying asset. Just like when you get real estate to get the rent, you have to own the underlying asset typically. But on the stock, even if you buy the stock, a lot of stocks do not pay dividends. Whereas real estate, when you buy the underlying asset, you collect rent. Now, the beautiful thing about it is that the idea is you want to collect enough rent so you have what's called the 1.2 or higher debt service coverage ratio, DSCR. When you have a debt service coverage ratio of 1.2 or better, they won't even care about how good your credit is or whatever, because they know that the rent that comes in from the property is sufficient to cover the debt. And now you borrow money, someone else pays the debt, and you benefit from the tax write-off, the depreciation, and the equity. The equity is the difference between assets and liability, or debt versus value. So if you have a property that you bought for $100,000, now it went up to 120, and you pay down the debt down to 70 grand, your equity is from $70,000 to $120,000, and you're benefiting from all of the tax benefit and all of the depreciation and everything else that comes with it. And also someone else is paying that debt on your behalf. So that's the beautiful thing about real estate, because it hedges inflation and it's something that you can leverage and it can be covered by a third party while you take the benefit of it. So what is better in the real estate world, selling or renting? Do you ask this question as a real estate agent or as someone that's interested in getting into the field of real estate and you want to figure out which mechanism works best for you? Is that why you're asking this question? Because, so you're trying to invest and you're trying to figure out renting or selling? So I'm not sure I understand the question, because when you invest in a property, typically you're buying, you're not selling. And there's two types of investors in this world, where there is the speculator, they're in and out. Some of them are wholesalers or option contracts, where they enter into a transaction with the hope of flipping the contract before they buy it. So you can even do this without ever owning the asset. Those are called wholesalers or flippers or option contract. And then there's the ones that buy and hold it. So my personal strategy is that I tend to buy real estate and I tend to hold on to it for a very, very long time. I see. So you currently own a property and the property is vacant, and you're trying to figure out, should I sell the property or should I rent the property? Because you already own the property. Okay. The only time I would sell a property, this is me personally, there's so many things that I would have to like dig into before I could answer that question on a personal level, but I can tell you what I would typically do. The only reason why I would sell a property would be because I can buy something better with the money that I'm getting from selling the property. So let me give you two scenarios. Scenario number one, I have a property down the street in Dedham. I bought it 2017. My interest rate on that property is 2%. Currently, it's vacant. But even though it has grown in value, because my interest rate is 2%, I'd rather hold on to it and do whatever I want to do, even if it's right off the loss from my income in other places, instead of selling it, because I will never be able to see another scenario where I'm going to get 2% interest rate on a property that I would own. Because even if I sold it and I made $500,000 profit on that property, if I go and use that $500,000 to buy something else, the issue then is whatever the replacement thing that I buy, I have to now pay market rate for the new money that I'm getting, which is going to eat into the rent roll or to the things that comes into the thing. So unless I find a scenario where it makes really financial sense for me to sell that property, to pull out the money, that property is a property that I'm going to probably keep until the day I die or something like that, or until I pay it off or something along those lines. Now, nothing stops me from pulling equity out of the property as the value of the property grows. But the principal main mortgage at 2% is something I'm not in a rush to pay, because I am 47 years old or 46 years old, and there's still 15 years left on that mortgage. So I want to keep that money stuck, blocked, whatever, wrapped, locked at 2% for the full 15 years. I want to ride that out. Now, on the flip side, if I am not in that situation, I have another property down the street, my interest rate is 6%. I'm not getting good rent, but there's equity in it, and I find an opportunity to buy something somewhere else, I would want to sell that property, do a 1031 exchange, grab the profit and put it into the other property where the rent is going to come in. The only point of investing in real estate really is, number one, you're getting positive rent, cash flow. It's important. That's number one. Number two, there's equity in the property. So you're becoming wealthier even if the cash flow is not there. Number three, you get some sort of benefits, whether it's taxes, whether it's depreciation, whether it's the reduction of your liability somewhere else. Or number four, someone is taking care of everything so it's not a burden to you, so that you can capture the equity in the future. But if those things are not happening, then having the property might be a burden versus a benefit. And that's also the reason why I don't tend to invest in in land assets without the actual structure on it. Land tend to grow in value. There's plenty of upside, but there's no cash flow that comes through it. So I'm not very attracted to land because of that one factor. So going to move to Pennsylvania, and I wanted something similar. So I don't know if you guys can see the question. I should probably read the question. I apologize. I live in New Jersey and I'm going to move to Pennsylvania and I want to do something similar to what she asked, but I don't have a property yet. Do I need to have a legal document or to be a real estate agent broker to buy something and invest? Okay, so I teach real estate agents how to get their license. So my answer might be biased, but I really have data to support what I'm about to answer. I think that if you're going to be a real estate investor, it does not hurt at all, to have your real estate license. I bought my first property without a license. I bought my second property without a license. But something happened on my second property. I realized how much the real estate agent made from me finding the house, me funding the financing, me coming up with a down payment, and all they did was call the other side to say, can you open the door so my customer can go inside and take a look? And that was it. Because a home inspector inspected the house. A finance guy financed the thing. An appraiser appraised the value of the property. I mean, I'm really good friends with the guy, even though it's been 20 years, still good friends with the guy. He still does real estate, but the guy made $7,000 or $7,500 just for him. And we're not talking about for him and his office. His office made 14 grand. He made 7 grand for me finding my second property. Since then, I went and got my real estate license, kept it for a couple of years, got my broker's license, then became an instructor after that. So every single property I buy, my mindset is I want to make a profit as soon as I buy it, and I want to make a profit when I dispose of it. And the way I make a profit when I buy it is by getting compensated by the seller through their agent for me buying the property. And it only takes like 40 hours to take the class. So you take the class, you pass the exam, you don't have to take a customer. But every single property that you buy, you get a license. I mean, you get a fee for it because you're licensed. So I would do that. Even if you find friends and family that are interested in buying property, you don't have to help them. I'm not asking you to become a real estate agent. But if you refer a friend or family to someone that is in the industry, you get a referral fee. The referral fee is higher than the fee that it will cost you to get your license. Because of that, I always recommend people to get their license. And you get access to the entire market. You have access to MLS. You can log in and see everything that the real estate agent sees. And if you're going to be a serious investor, even if you are going to refer, or even if you're going to ask people to refer deals to you, you can now do your own comps. You can sit there and see, this property is 3-bedroom. Let me look in the last 6 months, what are the 3-bedrooms sold in this area? Because of that, I think the license is valuable. Now, you can do that and then work with the broker, no problem. But chances are, if you have your license, you can even ask the broker to chip in to some of your deals. So it's really cool to do that. And I think there are great opportunities to invest in Pennsylvania compared to New Jersey. Pennsylvania is a Commonwealth state, but properties tend to be a little bit less expensive. So that's a cool thing. Congrats and good luck with that one. Do you invest in properties that need renovation? If so, how do you finance the renovation? Really good question. All of my properties that I buy, all of them, I don't remember. My first property is the only one that I bought that did not need refinance because I was full active duty military person and I didn't have the chance to do that. But even in the home that I am zooming you from needed rehab. So every single property that I ever buy, I'm looking for a value add. Value add means that if I buy something, there's got to be something wrong with it so that I know if I fix it, if I add, the value of the property goes up. How do I finance that? I typically buy a rundown property or something that needs work, and then I go in with a hard money loan, 6 months or 12 months, fix it with a construction loan attached to it. Then after that rehab, or after the rehab, refinance the whole project with the traditional bank. That's typically how I do. So, but the cool thing about this is that I am trying to take advantage of the syndication and do deals with people like you guys. Next question, Caroline. what is the real estate partner about? Okay. Can I talk about the business? I saw that Eventbrite and I was wondering, what is this about? Obviously about real estate, but just wanted to know. So we applied for what's called a syndication, regulation CF, with the Securities and Exchange Commission. And what we're looking for is an exclusive club of 250 people. That's it, not more. We can do it with less, but ideally we're looking for 250 people that are going to trust our expertise and invest on a weekly basis $250 every single week into a LLC account that all the members are going to be member of the LLC. Every single month, we're going to collect $250,000. Every single month, we're going to buy one house. We're going to fix it. At the end of 12 months, we're going to sell all 12 properties, or we're going to refinance all 12 properties. And then we're going to pull all of the money. That means that we're going to take on $3 million of crowdfunding investment, and we're going to rehab $3 million worth of property, hoping to get $4 million worth at the end of the rehab project. So if you invest $250 every single week, automated through our system, it allows us to buy one house every single month. And at the end of 12 months, we would own together, cumulatively, we would own 12 homes. We'll rehab the homes, we'll sell the homes, and we are guaranteeing to cut you a check of $20,000. $20,000. That means that it's greater than, well, it amounts to about 44% if we took the whole 13 grand up front, because there are 52 weeks, 250 times 52 weeks, 13, but it amounts greater than 44% because we're only taking $250. So at the end of every month, if we don't buy a house, you are not obligated to make the next $250. You can call us and say, what's going on? But if we do buy the house, you will have the opportunity to check on public record and see that the LLC that you're a member of actually own the house that we're going to put on Discord or whatever platform we use to share what we bought, why we bought it, how we bought it, what rehab needs to be done, and then when we dispose of it, how we sold it and how much we sold it for. And the HUD-1 statement and the deed and all of that, all of those things will be shared with the community, and it'll be also on public record so that you guys can see what is the thing. So what are the risks, if any? Every investment in the world has a risk. I'm going to talk about like the most extreme ones. America can go to war, and real estate, that's a risk. But because we hope to buy $250 homes at, let's say, $250,000, we don't anticipate that the capital will go down to zero. But risk could be we buy a property that has a tenant and we have a lawsuit with them, so we have to evict them. Or we buy a property and contractors screws up, but we still own the asset. But the idea is that because we're buying property every single month, what we're doing is dollar cost averaging. Every single month we buy one house, so it's dollar cost average. So good deals might be maybe at the beginning or in the middle or at the end. Bad deals might be somewhere in the sprinkle, but the good deals might outweigh the bad deals. But what we're doing is we are personally guaranteeing the $20,000 because I have 20 years experience doing real estate and I teach real estate agent. So I'm personally guaranteeing the 20 grand in exchange for the $13,000 because I want to build a relationship and I want to build trust, and your money starts the property, and it's going to be on a contract. We're going to sign it. I'm going to sign it. You're going to sign it. You know your obligation. I know my obligation. Every single week, the system will happen, and that's it. So let me see. Is that the only option, or do you have any? Yes. So we have, so that $250 is our main bread and butter, but we have $150 product that you guys can invest in. We have the $100 product that you can invest. You can do it for 6 months, or you can do it for 12 months. So 6 months, 12 months, $600. I'm sorry, 6 months or 12 months, $100, $150. So if you chose to invest $150 you get 13 grand. If you invest $100, you'll get 8 grand. If you invest 250, you get the $20,000. So we have different ones, and we can share all of the documents for it. Let me see. Yes, this is US. This is Massachusetts. This is New England. So we're going to look for properties in New Hampshire, Massachusetts, Rhode Island, New York, Connecticut, DC, but it's New England is really where we're going to focus our energy, because that's where we have license in. So we have brokers license in those states, so we can sit down and look for properties in those states. We have license in 13 states, so we're going to look for real estate in the 13 states. And so you don't need to be a real estate person to invest with this program. No, this is regular people that are like, you have $13,000 in your bank account. You want to invest this, you can do this. Even if you don't have money, there are ways to do it. So for example, there are 0 interest credit cards out there that you can sign up with and put that credit card, and your monthly payment is going to be like $100 a month for every $1,000. And you can do this for 12 months. At the end of the 12 months, because we're cutting you a check of 20 grand, you pay the credit card back and you walk away with the difference. So this is for anybody that see the value in it, that sees the value. As a matter of fact, there's an incentive in using credit card, because credit card, if there's anything fraudulent that happens, you can literally call your credit card company and say, within 90 days, you can call your credit card and say, hey, this was a fraud. I want to get my money back. I'm just letting you know. But if it's not fraudulent and we do have the house and we show you the deed and we show you all the paperwork, then you get 7 grand at the end of the thing if you invested $250. But yes, it's there are a bunch of options. Do you need? No, you do not need to. You could be anywhere in the world and invest in this product. You can be in El Salvador, in Brazil, as long as you have a credit card and you put the credit card and your name, your phone number. If you are domestic, we'll give you a 1099 with your money. If you are international, we'll pay the tax first. And the reason why we like to do 12 months is because capital gain tax less than 12 months is 25%. So you're going to pay 25% to the IRS. If it's longer than 12 months, that capital gain tax drops to 15%. So you're going to pay less on capital gain tax. So that's what the real estate partner is all about. And we are regulated by the Securities and Exchange Commission. So we applied with the Securities and Exchange Commission to do this program. But because my team is only a team of 4 people, we're a very, very small office. We want to only handle 250 people. And I think we have like 60 or 70 people that have already signed up. We don't want to take anybody's money until we have the full list. But once we have the full list, we're going to call everybody. We're going to say, hey, we have a full list. It's 250 people. Everybody's on board. Here's the contract. We're going to send it on DocuSign. You sign the contract. You send it back to us. You fill out a form with your credit card information or your debit card or your wiring instruction or your ACH. And the computer automatically charges you like a subscription. And at the end of every month, we buy a house and we say, you're a member, you own $250 worth of this house or $1,000 worth of this house, right? And at the end of 12 months, because it's capital gain tax, at the end of 12 months, when we sell everything, we send you a check for 20 grand. And then at the end, we'll say, how was the experience? Did you like it? Do you want to do it again? That's the idea. Where can I reach you if I have questions? We have Hector, can you help? You can go to therealestatepartner.com. You can email us. And can you please talk about the program?
I will leave in the comments all the places where you can reach us. You also can follow us and subscribe on YouTube so you can be on top of all the promotions and all the deals that we're putting live. So
yeah, and the cool thing is because we have everybody's name, this is a really good question. Because we have everybody's name and everybody's email, we can send everybody email, maybe a brochure or a flyer or something that you guys can contact us. But this is not the same thing as Fundrise. I want to correct that. So yes, it is the same as Fundraise. That is correct. But it's not. There's a company called Fundrise, and it's not the same because Fundrise is a 5-year hold, and it's $250 investment. But this is a fundraiser or crowdfunding where me and a community of people that I hope to be friends with, and we're going to do a bunch of real estate projects, and we're going to share the profit. We're going to use my expertise. We're going to use my team's time and energy. We're going to use my construction company. We're going to use my lawyers to figure out the best property to invest, and then go from there. So that's the idea, right? So let me show you. Let me see. Yeah, so that's the idea. That's pretty much it. I don't know what other questions that I can answer. This is awesome. So I guess the webinar was really about building wealth. I think the best way to build wealth, number one, earn. Number two, spend less. Number three, whatever you save, make sure it earns. And then repeat. I think that if you guys ever read the book, The Richest Man of Babylon, I think like that's one of the, it's like I read that book, I think I was 17 or 18 years old. And I mean, it made me who I am today, even though it was like a very weird book with like old world Babylon kind of shit, but excuse my language, but it was very, very simple and elementary. It was like earn, take 10% of what you earn, put on the side. When it becomes big enough, make sure you invest it, own your own property, things like that. It was like basic, simple rules, and then repeat it and repeat it. In a span of 10 years, 20 years, God knows where you'll be as far as wealth is concerned. So today, because I just followed that simple rule, I'm thankful that I have a bunch of properties, but as a greedy person, I mean, I have American mentality, right? Because I am greedy, I want to have more. I figured that getting more would be easier, less stressful if I did it with a group of people. I think that's why I have gray hair, because real estate is very stressful and very, very lonely. When you start doing a lot of deals, it's like you are doing it by yourself, and that part is not fun. But apart from that, I think real estate is like the most awesome thing, because I mean, I keep telling people, real estate is the only thing that whether you're alive or you're dead, you still need, right? They need to bury you somewhere. When you're alive, you need to stand somewhere, you need a roof over you. I mean, people say you need food, air, but when you're dead, you don't need food. When you're dead, they bury you, but they bury you somewhere. So real estate is one of those things where I am personally like passionate about it. So that's why. Awesome. Anyway, so we'll send you a copy of this recording, and we hope that you guys enjoy this webinar. Tell your friends. I think we're going to try to have these webinars twice a week, Hector?
Yes, twice a week.
So I hope to see you guys there. If you have any questions, let me know. And you can send us an email at the info@the Real Estate Partner, and then we'll get back to you. And we hope to see you soon. Thank you so much. I appreciate it. This is awesome. Let me make sure I answered all the questions. Awesome. Thank you, everybody.